Okay, g'day everybody. Hope everyone's well. Sounds like I'm coming through. We'll just do a quick sound check if we can, thanks. Just get out loud and clear from a couple of you. Hope everyone's well. Good morning, a good afternoon, and a good evening, wherever you may be. Thanks, guys. Colin, MJK, Marcio, PDF, Tezza. All right, fantastic. Thanks, guys and girls. Woody, Foosh, Orange Dog, Slates, Prashan Thulavale. There we go. All right, let's jump in, folks. So welcome to Wednesday workshop, Traders Workshop. So workshop for today, we have member trade reviews again. Now, certainly myself got a lot of benefit out of this years ago when I was learning to trade and trading, and just reinforces what we already know, but it's that repetition that sinks in. So these are worthwhile. We won't do these any more than every 3 or 4 weeks, but also I think it's a good opportunity to have a look at some of the recent trades because they're recent in our minds. So introduction. The purpose of the trade review is to conduct a constructive review or post-mortem of the trade to evaluate our decision-making processes, which can then be used as an opportunity to learn from our decisions, thus continuing the trade review improve feedback loop. What is of interest is our thought process behind the decision regardless of the outcome. So our trade review improve feedback loop. This is all important. So all we're interested in is our thought process behind the decision, regardless of the outcome. So ideally, the information should be on one page. If you want to be involved in this again, and I certainly suggest that you do, submit your trades. And it's an opportunity for us to have a look at it and just evaluate the decision-making process. It's not an opportunity to make someone look silly. That's not it at all. That's not the purpose of it at all. So ideally, the information should be on one page and include the following information. Higher time frame chart with bigger picture analysis, the market structure context or market structure and the context illustrated, and any other information deemed important. And the next one should be the trading time frame chart with key features illustrated, contextual information, entry, initial stop loss, trade management and exits clearly marked, and any other information that's deemed important. So ensure also that a few bars or candles are shown past the exit or post-exit to illustrate how price behaves after the trade was closed. Keep the chart as clean as possible for ease of viewing, but include any indicators or other technical analysis studies if you have referenced them in your analysis. So thank you for your participation. Thank you to those that have participated this week. So what are we looking to review? So as usual, we've got 4 things. We're looking to review our analysis of trend, which is on the higher and the trading. Let me start again. We're looking to evaluate our analysis of trend on the higher and the trading time frame, looking at any trend lines, market structure and contextual information, any indicators to do with trend analysis. Pattern analysis. So if you use Elliott Wave principle like myself and VJ, any classical chart patterns, anything else that you deem worthwhile in pattern analysis. We want to assess the momentum. What is the projection, retracement, strength and weakness, any indicators that you used in momentum. Short-term bar analysis. So we want to have a look at the supply and demand dynamics, which includes any candlestick patterns, any short-term bar analysis, etc. So let's begin. G'day, G. Morphes. So just bear with me while I transition over. Apologies for the black screen coming. Alrighty, here's the first one. First up. First one up is from Bluefin. So Bluefin has submitted his trade. He's included, let's just zoom into a bit of it at a time so we can have a look. So Bluefin has got his daily chart up. Now Bluefin submitted a trade last time, a couple of trades last time as well. So he's got his daily chart up here, and he's got some notes here. He's got clutter to the left above, which is great in here. So we've got an area of consolidation here. So this is obviously one to watch for if we're trading in this direction. And he's got the blue line as weekly resistance across here. So this is good. So we've got a couple of areas of resistance, a bit of a cluster here, a confluence. And we've got down the bottom here, we've got our Morningstar reversal pattern. So we've got our bearish bar here. We've got our hammer down here. And then we've got our bullish bar. This is also, it's not quite, but it may as well be an engulfing. Engulfs the body only. And we've got a close halfway up here. We've had a lot of buying pressures come in here. So this actually fits the bill. Let me just see if I can zoom in a bit further. There we go. That's better. So this fits the bill for the Morningstar reversal pattern. We're not sure what's down here, where this is appearing, but we've got the pattern here. We've got, if you use stochastics, which obviously it does, you can see the stochastic is in the oversold area, and Bluefin's using a very fast stochastic. I know those settings. So we've got a pull out of here. So we've got an oversold reading on the stochastic indicator, which is not a bad indicator if you're going to use one as well. So it backs up what he's seeing here in terms of the Morningstar reversal pattern, which is great. And we've also got our wick fill. So price has come back down and it's tested part way down. See, quite often we'll get a reversal pattern like this here, and we can't see what's occurred above here because it's a daily chart, but that's okay. Quite often we will get, price will come back and test a certain part of this candle. So we call it the Bluefin wick fill. Aptly named. So you can see price has come down, it's done the wick fill. And there is actually trade opportunity in here. We won't go into that. But it's filled the wick. It's filled 2/3 of the wick, which we like to see. And it's pushed back. Now, we don't know whether this happened first or whether it did it later. That's okay. We'll probably see on the 4-hour chart beside us. So that is our reversal signal. This is our short-term reversal signal, our candlestick pattern. So we've got our set up here on the higher time frame. Let's go and have a look now at the trading time frame. Now, are you here, Bluefin? Maybe not. So here, as you can just see it up there, here's his trading time frame. So he's got his 4-hour time frame. So you can see we've got our daily chart. So he's taken his setup or his context on the daily chart, which is the reversal pattern. And we've got, which this occurred afterwards, but he's got here, he's taken his retracement. I can't see the high here, but obviously it's back here. So he's taken his retracement up here, and he's looking for price to come back up and fill at 50%, which is here. We can actually see this is after the event. we can see price actually came back to 61. So whether you believe in Fibonacci or not, that's okay. Quite often they're self-fulfilling. So he's got his note here, counter trend inverted head and shoulders trade. Now quite often these morning star patterns, where there's a wick fill, will represent a head and shoulders, inverted head and shoulders on the smaller time frames. So we've also got some moving averages here. Not sure what they are, that's okay. So then we'd have a look at his trading time frame chart, which is the 4-hour, and let's have a look at what he's got here. Now, we did make some observations last time, if I remember right, about the chart, and we can see now that Bluefin's cleaned the chart up a lot. So we can see the structure here nice and clear. On his 4-hour chart here as well, we can see from his analysis here, we've got the grid as well, which is maybe a tad light. We can see here that we've got his confirmation here of, I'm going to zoom right into this low because I want to have a look at this a bit closer. So this is our 4-hour chart. We've got our potential left shoulder, got our head here. The thing that we've got here is, see our retracements normally, very just shallow, but now we've got a big bullish engulfing outside bar. So we've got right from the low here, we can see we've got a real push has come in. Now that push has then resulted in a couple of okay, that's good, we can see that. Okay, we can see we got the push. We can see supply coming in here, and our trend channel is right here. Sorry, our anchor. So we've got two lower highs. So on the 4-hour, here's the first point here that we consider the anchor to the downtrend. So price is pushed up into it. We can see we've got a bit of selling pressure, but then we can see we've rounded out, giving us the right shoulder. And we've got, Bluefin has also put here, we've got a suspected wave 1 from the low, so push, a wave 2 from the wave 2 retracement, so a shallow wave 2. And if you look close enough, you might be able to see another 1, 2, 3, 4, 5 in here as well. So there's 5 waves up into 1. So we've got our push down, we've got a pretty harmonic right shoulder. We've got a nice little bit messy, but a little cradle pattern here as well. See this here? We've got the push down here, cross, straight back up. Not quite our V reversal, but very similar. So we've got prices pushed back hard. Now, we're automatically on the look when we have these big moves as well on the daily chart, slowing momentum. Always be on the lookout for a counter trend trade. This is the daily chart. It's a daily chart, but you can get, and we've seen this recently, you can get quite often good 100, 150 pip moves on the retracement. We might be thinking it's just a correction or it may be a reversal. We don't know. So we can see prices come back nice and sharp. And we can see here then we've come back up and we've attacked the other anchor. We've approached, retested the anchor here. So we've got a couple of shakeouts here either side. Then we've got another push back up. So he's got a note here, enter on confirmation of trend change. So the trend change would be his blue line here, which is the break of the anchor. And it looks like the stop loss is down here. Okay, and then we've got a push. So this has worked nicely. And it looks like here we've got a nice push up into suspected third wave. And it looks like price was pulling back, and he's got here that he's taken profit on the pullback. So just at a rough guess here, it looks like just over 1-to-1. So that's okay. So take profit 1. So it looks like he may have taken all of it out at the first take profit. So then he's got his 50% retracement level here as well. This is his second take profit. So this is a great level. The Aussie dollar, 50%, it's probably bound to stall or do something here anyway. So that's a great level for his second take profit. So he's got entry 2, possibly in here. He's got missed entry down here, maybe further down, I'm not sure. And his stop loss obviously is back here as well. So on the pullback there as well, if you miss this sort of break, you can look to take the pullback. So you can see we've got a little ABC in here as well with a higher low for the C. So the pullback looks good here as well. So we've got the big move here. You can see we're holding probably 61% of this candle as well. So that would be a nice entry there as well. So then we've got a nice bullish engulfing here as a continuation. Some of these are I like these just as much as reversals, especially where they're at. So you can see we've got the pullback A, B, C, bullish engulfing. So we've now got the buyers have stepped back in. We've got a close above the high here as well, so this is good. So we've got 3, 4. Yep, I agree with that. And if you look closer, we've probably got one possible 1, 2 here with a 3, 4, 5. But anyway, that's not. Here we go. Red is the second trade. So okay, so he's taken his second profit here as well at the 50% retracement. So that's good. And it's gone up a little bit further. That's okay. It's gone up about 30, 40 pips. All right, so that's okay. So his second trade, about 33. With about a 30 pip stop, I would say. Yeah. That's just over 1-to-1, I would say there. And just over 1-to-1 here. So over the 2 trades, probably 2.5 hours. And then we can see when prices come up here, it's created the high. We've got a shooting star here. And it looks like our 5th wave here. And he's got A here, which is correct. We'd probably have A, B, C. That's what we're looking for. We've got no choice here. So this can be A or 1. So this could be 5 of 1, 2. We don't know yet. It's too early to tell. So he's left the trade for a few bars after. So we can see what happened, and we can see here price actually came back. If we weren't vigilant with our take profit, he would have actually been back here near his entry. So how would you have felt here? So we're now only 10 pips in profit when we've had 30 on the table. So how would you feel if you'd left all that? In fact, we've had more. So maximum favourable was at least, say 75, was at least 65 pips. Maximum favourable. So can you see here he's gone for just a nice swing. For our chart, 1, 2, 8, 10 hours. Maybe here. And here really it was only in probably 4 or 8 hours, depending on his entry here. So that's a terrific outcome. So daily chart. We've pulled apart what we can of the daily chart. We've got our retracement here. We've got our 4-hour time frame here, so our big picture analysis. We've got our he's waited for the entry here. So he's waited for the confirmation here. He hasn't just jumped in here, caught the falling knife. So you try and do that in here. You might try to do it here, see? Oh, we've got a bit of a fake out here. Well, it just comes up and then just takes you out. He's waited for the confirmation back up here. It's tagged it once, it's pulled back, tagged it again. So in fact, here is our little basing cut with handle as well. See it here? So we've got the cradle. We've got the nice pullback as well. So there's our cup. And here's our handle. But it's a basing type one. And these will occur quite often and look like inverted head and shoulders. So he's happy with that, happy with that. G'day PFX. So good trade, good markup. So the trades are getting better, the reviews are getting better. And that's all you need to do, folks. But the more important thing is to pull it apart like we've done. And you can see the logic is used in there. Right? Now, I'm not meaning to put Bluefin on a pedestal, but I'm going to. But Bluefin's been trading for 8 or 9 months. All right, let's have a look at the next one. Maybe 10 months, I think he's been trading. And this is the only way to learn. It's got to be consistent effort. And you've got to have a routine and a way to analyse and pull your trades apart. So here's another one from Bluefin where this is a reversal trade that's failed. So he's included one that failed as well. So he's got his daily chart here. So he's got the daily chart with the line chart. So this is great. You can see he's picking up Elliott wave theory. So we've got 5 waves down. We've got A, B, C, ideal. C coming back into the region of 4th. 1, 2, 3, looking for 4. Looking for 4 in here, and he's probably looking for a push down. So pound yen daily. So he's got the clarity here of the line chart. He's done his Elliott wave analysis, which looks great. We've got our little channel here as well. So we've got our zigzag here. So let's have a look at the 4-hour now. So the 4-hour starts obviously from here. So the 4-hour here at his suspected third wave here. We've got a push up. We've got a weak push up. You can see this is very weak. Suspected A, B. And we've got a bit of chopping sideways here. And then we've got a big push here. So let's just go back and have a look at his entry, right? So we've got we've got a shooting star here. So he's trying to get an early entry into the reversal. So trying to look for a rejoin the trend. So when we get a alignment with the bigger trend, which is good. Now, quite often these ones can be a little more difficult because it can quite often go a little higher and then move. So the timing can be just out sometimes on these. So we've got a shooting star right here. Now, I don't know where this is appearing, whether there's resistance here or not. So that would certainly help if this is leaning on something, or if this shooting star was a result of a shakeout. So in other words, another swing here, shakeout and a failure. So we've got evening star reversal pattern. Well, what we've got though, we've got a big thrust here. We've got our shooting star here. This bar here really needs to be more than halfway of this big one to be a valid evening star. So it needs to have closed down here. Below 50% of the body of this one. Obviously, the further down it is, the better. See in our previous example. Sorry. So what we've got though also, got a lot of momentum here. Got a lot of volume coming in as well. We've got a break outside the channel. So he's drawn his trend lines correctly. We've got a break above this channel. Now I consider this as strength. So generally with these, I want to see these fail like this one here. See here? So you imagine we drew a channel here. I don't want to see them pop out of the channel, but that's okay. And even better, just do a false break above A and then fail here. So we've got to push here. Looks like we've entered here with our stop above the wick. We've got the wick fill okay. You can see it's tried to push back down here. So it's done the wick fill. Oh, you may have entered here. Excuse me. Possibly here. But then prices come straight back. Closed above the wick here. And we can see we've also got a couple of small bars in here. So we've got to pause above this high. So this looks like it's going to continue. So his stop loss was here. So he's obviously taken out here. And he was looking for a down to 5 to take his profit. So you can see he's included a failed one here. And he's put a note here, too fast. Yeah, well, that's absolutely right. There's strong momentum here. So we've got to be careful with these when we get this strong momentum. It needs to just blow itself out. It needs to run out of strength, run out of puff. So when you get these big moves like this, you're better off waiting for a secondary confirmation. So very good. So the key takeaway from this one, I guess, he's put here is too fast. So the takeaway that I would put from this is strong momentum here. Now, folks, oh no, I'm not. Okay, apologies there, folks. I obviously pushed the chart around a bit quick. Just bear with me. I'm going to just close the program down. Test 1, 2. Test 1, 2. Okay, sounds like I am. Apologies there. When I whiz the mouse around too fast, it obviously doesn't like it. Can I just get it loud and clear again, folks? Just confirm I'm still coming through. Thanks, Firesword. So, great example. All right, let's have a look at the next one. Thanks, folks. Yeah, I forget to close that program down. All right, now here's a good one. So here's one by PDF84, who I see is in the room. So thank you for this. So we've got the Swiss yen. Now I remember this one quite clearly. So we've got the Swiss yen, 1 hour, 60-minute chart. We've got prices pushed up hard here. And we can see we've now got what looks like a corrective here. Got the internal trend line. He's got his internal trend line here. He's got the tag of the internal trend line here. So once we break the low here as well, we can actually draw that through here. So you can see we've got that. So he's obviously looking here. He's got the anchor here as well. This is on the 60-minute chart. So this is a bit quicker time frame, bit smaller time frame. So we've got the break through the low here. We've got the push up to the anchor, the 60-minute anchor. So we've got the first tag of the anchor here. We've got the push down here. We've got the smaller anchor right here, little downtrend anchor here. Sorry, little uptrend one here. Price has respected this. Price has pushed back up, tagged it, it's come back down again. He's got the 20 period here. And then we've got small pullback here. So even this little range here looks like about 50%. And then we've got a push straight through. So he's taking the entry here on the break through the anchor. So all in one go. We've got a stop loss back here under this point here, so protecting this position here. We've also got a bit of resistance here. So here's our B wave, our previous B wave on the 4 hour. I remember this now. So this was a level here to watch. So he's obviously seen this one, and this one here. So what he's done, he's got the push through, so his entry there, 114.735. And he's taken his first profit quite early. And he's taken his second profit right at this resistance. And that's what I like to do with a lot of mine, where I won't take the trade unless I can get 1-to-1 to the next obstacle. So once this pushed up hard here, you could actually bring your stop in here, or even closer, because this has demonstrated this push. So okay, his first exit he's taken plus 11 at 0.03, he's taken out, and the second one at plus 20 into res here. So he's already unloaded 60% of his trade. Then price gets rejected hard from this level. And now it's bouncing around and testing the anchor. It's testing the break point, which it often does. And we can see this big candle and this drive here. It's probably tested 61%. Plus this level. So this has acted nicely here as support. We've got a little shakeout here. We've got a little, we can see price here is actually holding in this region. See here, see the breakout point is validated. And you can actually see a little small head and shoulders here as well. Double shoulder, head. The left shoulder could be here or here. So you can see price has respected this. And it's holding in here, creating a bit of a two-way price action here. Excuse me, we've got another attempt here So what he's doing is he's obviously holding and waiting for the push. So we've got another attempt. We've got another push out here. So when price came in here, I'm not sure when he moved his stop, but it was obviously reasonably quick, I would think, judging from where the bar's drawn. So he's moved his stop in to protect the remainder of his position. But not an entry here where it's probable that price will come back and test this area. Okay, after the second takeout. All right, very good. Very good. Okay, so after the second take profit, he's bought his stop just under the break. So he's protected the remainder of the position just under break even. So not right here where price would have taken it out at break even here and retested this area, would have taken it out reasonably quick. So he's allowing for this to continue and to push and to try and give it a chance to push up. But he's taken something off the table here. So no longer do we have a full position at risk. So he's banked 11 and he's banked 20 and he's got 60% of his trade is already gone. He's got his stop in here to just under break even. So price has pushed around. Price has had a go here. It's failed here. And then we've got now strength against the position. Now this is all well and good in hindsight. When price has tagged the high here the second time and it's failed, possibly the break through the low here might have taken maybe something more off. But that's okay. He's holding for the long run. I wouldn't say take the whole position off. So I'm talking where I'm talking is right here. See this here? Price has had a great attempt here. It's come back, A, B, C, and we're just pausing, holding. Had another go. Can't get through the second time. So I've actually got a little double top here. So under this shooting star here, people are going to go short as well. So maybe that position there, maybe a +8 or something, or even a +5. Start protecting the position. But otherwise, no, it's still pretty good. So then price is pushed down really hard. So there's no doubt now. The price is pushed back through the anchor, pushed back down through the stop loss, and pushed down. I think I remember this kept going. So price had a good attempt here. We can see the V reversal here, pull back to about 61, holding the anchor. Another internal structure in here, and then a massive push. So we've got the test here, pull back, straight back. So the strength into the anchor. So third exit at the stop. So instead of leaving the stop swinging down here, he's moved it up here, which is after he's taken 2 profits. So you imagine if he had taken the 2 profits and left the stop swinging down here. If it had kept going here, it would have taken him out, taken the trade out, and probably ended up with 0. Right? So your stop loss always should be maximum stop. When you see a nice big move like this, it should not give back all of it. So keep moving it up, keep reducing your risk as price is moving. Right? So look, Exalted Crown, sometimes in this environment, especially the environment we've got now, yes. But I think you have to, the way that I trade, you have to give it every opportunity to push. G'day, Adriana. Because otherwise what will end up happening sometimes is if you take a full stop, these aren't big enough. The idea though is to go for the home run, be happy with singles. So his third exit, negative 14. So he's kept 40% of it to try and get the big move. So when we add it all up, he's taken around about plus 9 pips. Okay, so a little bit of a skewed. So we've got about 0.25, 0.26R. All right. But when you look at what occurred, I think that's a terrific salvage. Gave it every chance. No, it wasn't going to go. No. Scratch trade, small winner. 0.26 winner. Right? So now Magnetron has asked, how would you automate those take profits? Looked like it happened quick. Yeah, absolutely. Whatever this is here, you put your first, use a trade manager, take your first profit out here, allow it to bring the stop in somewhere, not right in here. You can if you want, but knowing this was res, right, take your first out there, or in there, I'll take a couple out there. Quite often with these, now I think we, yeah, that's right, we did. These sort of situations, if this was a little bit further apart, maybe up here, what I quite often do is take the first one out here, second one here. If this is a major res, I allow the trade manager to come right up and bring the stop in hard up underneath. So it either breaks or it gives me something on the, or it takes me out here. So the best type of trade management is the one that we think of after the event, right? You have to go with what suits you. You have to go with what suits you over the long run, what suits your personality. So you can see he's got here market running out of puff. So this is his trade record. So when you pull it apart, and obviously it doesn't take as long as we just did then, but when you're able to pull it apart like that, and you can see here too, if we drew a trend line up under here, here and here, you'd see it actually broke it here as well. Double top, break of the trend line. This is it here. See how accurate I can draw it. Something like that. Maybe I'm drawing it the way that I want to draw it. But anyway, that was a little bit of a heads up as well. So overall, okay, we gave it a crack, gave it a go. Didn't want to move. We took something off the table, protected the position, ended up with a small profit. I'd say that was a good outcome. Wouldn't you? You can see a bit of the volume coming in here as well. You can see it tried, very much tried. But unfortunately, no, this wasn't going to be. I remember this. I remember this area. So there we go. Now, folks, we've well and truly used our time up. Sorry, when I say well and truly, we've used our time. I was going to have a look at a couple of recent trade examples. Which was these. You can have a look at these yourself. You can have a look at these yourself if you want. I won't do them now. But that's them. So go and have a look at some of those opportunities recently. I'll show you quickly where they are. Oops, sorry. So there you go. So well done, PDF 84. That's great. That's great trade record. A great, good outcome considering. Trading is all about protecting yourself and looking after risk first. Because when you do that, the upside takes care of itself. When you protect the downside, the upside protects itself. So here's the first one, dollar Singapore. Have a look in these areas here. Wedge, push. All right, here's the first one. I won't go into it. See the wedging structure here? Break of the anchor, push. Good little trade there. 29.30 pips. 20 pips stop. Anchors, support, previous breakout. Here's the other one. Res, first attempt. Attempted fake out. Back in. Push through here. See this one here? So one of the guys in the room took that one. So maybe 10 or 15 pip stop. Maximum favourable was about 25. So same thing, take your 1-to-1, try and let the rest run. Here, big bar here, maybe the rest out here. So go through your trades like this when you see them after the event. We saw this one on the morning, and then it triggered later that day. And this one, we saw it after the fact. So there we go. Any quick questions, folks? One question. And I think if you think of a series of trades, one, well, not I think, when you think in terms of a series of trades, that one trade becomes irrelevant. No questions, folks? No one going to put their hand up. We're not getting any follow through. Yeah, here. So here's another one. See this? Nice push. No follow through. We're seeing this a lot. See here? Market's just not wanting to follow through. Yeah, Mayflow. Right. Everything is exactly the same. It's just very short time frame Mayflow. If I took the time frames away, would you know any different? Thanks, Guard Dog. I have done just a little bit of study. So here's dollar Chinese, Chinese yuan. So we got the cup with handle. So we're failing to really push as well. Markets are nervous, guys and girls. So we've got the nice little coil in here. There's no follow through. Or very little. See here? Nice little ABC here, or little consolidation. See the break? See, it's just holding here, look. Just sitting here. Now those that were still in it, I suggested bring your stop in here. See, it's protecting it. That's the anchor. Right there. Original one down here. As soon as you get a push, you can come under here. And we've got the break above the high here, under here. You see the lack of follow through. Here's that next res. Right. Let's do the next one quickly. Seeing we're already almost there. Swiss, Singapore, here we go. There's two here. 4 hour, 60 minute. It'll be these. I'll just do these quickly. We won't go into too much detail. So resistance, first attempt, too sharp, pull back, break, pull back, holding the 20 period, nice bullish bar here, very small channel here. Right. So what gives this context is the fact that we've broken once, we're even holding this swing. This is not the anchor, but it's a swing. Holding the 20, push up. A bit of a messy thing, but gave a maximum of 60. That was it there. So that was the other one. So there you go. We've done all those. That's all you need to do. We did all those now. Not in detail, obviously. So there we go. Very good. All right, everybody. Thank you for your company. I hope that was hope that makes it a little bit clearer. But you, trust me, you can't get enough of these repeat. This is part of the trade review feedback loop. So make the trade, review it, see what you did right, see where you can improve. So back to you, folks. So how many people next time? How many others are interested in putting a trade in? Very good, Exalted. Thanks, Tezza. Thanks, Clem. PDF, Kelly. Ropes, Gene. So these are very worthwhile, folks, and I encourage you, get your trade in. If you want us to have a look at it like this, put your trades in when I give the nod, and we'll have a look at. We only get 3 or 4 in one go, but they're worthwhile, absolutely. Because I'm going to have to cut Bluefin off soon. No, just kidding. All right, everybody. Thanks again for your company. And I'll see some of you tomorrow for Asia. So, bye for now.